following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are responsible for your own happiness. Happiness never comes from outside of you. If you put your happiness into someone else's hands, they can always take it away. Happiness can only come in from inside of you and as a result of your love. Market-wise, let's take a look at it out here. We have the Dow Industrials down 233. NASDAQ off 12. S&P's down 7.5. Gold contract down $1.70, trading at $13.2540. Silver down 8 cents, $16.54 an ounce. Light sweet crude flat. $60.89 a barrel. Notes and bonds. You got a bid out here, folks. 10-year note up 6 ticks. 120.17. 30-year bond up 25 ticks. 144.29. The 30 years taken out at swing, has volume behind the move. Bottom line, you're getting higher price, and actually rates are going down. We take a look at the 10-year right now. 10 years at 2.813. The high for the year has been 2.950. Deviant little bond market out here. King dollar up 62 ticks, trading at 89.255. The euro is trading at 123.71 to 1 U.S. dollar. The yen is at 106.28 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. One that's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so we get over to the SPY. What you're going to see here is that your SPY failed on price, failed on volume yesterday. The SPY got up to 280.41, going into the February 27th swing high, 278.92. Failed on price, failed on volume. Bottom line out here today, we'll see whether we get an expansion of volume on the way down. I expect that we're going to it's going to be a close call. That's the real bottom line. Right now, you're at 64 million. We'll see whether that can get up over 100, because that's what it's going to need to get an expansion of volume. What we do have intraday out here is that the last spike lower, which did occur just 20 minutes before I got on the air. Bottom line, that has volume once again. So that's saying that 274.73 is going to be game to get tested before we get into this close. If we go over to the future market and take a look at that future market, you're going to see the same type of setup. Right now, the futures are down 19.75 at 27.53. The low is 27.48. If we do this intraday, and you're also going to see that the first time down, folks, what the market did, let me show you this. This is pretty cool. This is the building cause to go blow out this bottom. So what we've been doing all day here is going into your updraft on last Friday. What we had last Friday out here is that you had a low of 27.38. You had a high of 27.63 in one 10-minute bar. That was one 10-minute bar. That's about as intense as you can get. That's when the bottom line is that the numbers came out. Market goes topside in a big way. Okay, so now watch what we did. Once you get into the top of the bar, it's trying to get into the bottom of the bar now. The first counter trend bounce that we did at 1 o'clock, bottom line, nice counter trend bounce. went from 27.50, got all the way up to 27.67 in 40 minutes, gave it up, and as we gave it up, that last bar at 20 minutes of has volume. So that's saying we're going back to 27.48.75. If you get down there with volume, what I expect we're going to, because we got an hour left, this baby is making its way back into this level where we broke out from at 27.38. We go into the NDX 100, because the NDX 100 is also showing that you very well may have a failure. It's going to be really a close call out here, and this is what it is. When we broke out of the high of January 26th, 7,022. We got down to 7,012 today. In order for the NDX 100 to get lower, it's got to get back inside that first, because that, no doubt, is support, and it's big support, because when we broke topside, the Qs had volume, you have a gap there. Bottom line, we'll see if, in fact, we can get back inside there. The composite, we take a look at the NASDAQ composite. Composite, same type of setup. The composite, however, has a larger number. Actually, no, look at this. This is interesting. Okay, the composite's sneaking back inside here. We just got back inside by 7 points. So the number in the composite, 7,505. We're at 7,493. That's a heads up in itself. Why? Because guess what? Can't bust them up. You're going to bust them down. In the context also that the S&P, which no doubt is the largest index out here, couldn't make the February 27th time swing high. Small caps aren't telling us much just yet. We had a high yesterday, trading up to the price point of 160.30. That 160.30 had 17 million shares. What I do expect we're going to see inside the small caps today is that as we're going lower, I expect we're going to see 17, 18, probably 20 million shares traded out here. 30-year bond. The 30-year bond is basically giving us about the most amount of information out here, and this is what it is. 30-year bond has taken out its swing point, has the volume behind the move, and on top of that, folks, the bonds have been going down since December 15th. That is a monster number. Now, no doubt, nothing goes down forever, nothing goes up forever. We'll see whether that's just a counter-trend bounce, or we'll see if that's a turnaround. The way that I suspect this would work, if this is a turnaround and notes and bonds are going to go higher, we're going to see the market itself get down into the February 9th level. Because if that's what we got, the February 9th level, you know, is really low. The February 9th level is 25.32 in the S&P cash. That is a big move. Because of the way that the first move down to that level is when you had the market going down and we had bonds going up. That's what actually drove that down. What I expect is going to happen here is that if we're going to make a run for it, which I expect we're going to make a run for it, you're going to see the money pouring into the note market, into the bond market, and that's going to set up higher price, lower yield. Dow Industrials right now down 262. NASDAQ is off 20. S&Ps are down 20.5. Coming right back, folks. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go take a look at some of the higher volume stocks out here today. You have the top volume out here is Ford. Ford is up 29 cents, trading 11.07. GE's down 13 cents, $14.29. We're going to go take a look at that. That's approaching the $14 mark once again. Apple's down $1.69. We have PayPal up $2.89. Signet Jeweler. We're not buying any jewels, evidently, from Signet, and Signet is K's. Signet owns a huge amount of jewelers out here. That's down $9, trading $38. And this is one big number. So let's see what that's happening first. Okay, this is, ooh, baby. So this gap down from $77 into 52. November 20th, that's when it came out with numbers. More than likely came out again. Let's just see if they come out with numbers once again. Okay, yeah, so this is pretty intense. That they actually, it looks like they actually made their numbers, but the market's given it a beating because same sales stores, the estimate was minus 5.1%. They come in at a minus 5.2. Their sales was $6.3 billion. Earnings per share was $5.24. Bottom line is that there's something in there that this market can't stand, because this is a monster ABC down. And A point on this is a 77. Your B, let's say 50, 22 bucks. Your C is 60, so you're talking about 38. Oh my God, okay, this is interesting. So we hit 38.53. Let me bring this back a little bit further. Oh yeah, this is going to be a 100% move. This stock is down from $142, and this thing's going to go after $23. Big number, monster number out here. Let's go take a look at GE. GE, of course, has been getting hammered for a long period of time. GE is going after another swing point, $13.95. We hit $14.26 out here today, and this baby is going after the highs of its lows. If we get into that, and I expect we're going to, the highs of the lows was $11.35. You get into that, and sayonara, because it looks to me like 572 is game, and we'll see how much more GE has buried in their balance sheets. Do you know what the shame is with GE, man, which is just unbelievable, is that that is a brand, is a name, was, I would say, probably still is one of the, you know, good brands out there. And we're going to read stories about this 5, 6, 8 years from now that are going to be basically disgusting, meaning that they've been cooking their books for a long period of time, huge amount of time. Inside the Dow Industrials, let's take a look at the number of movers out here, and Boeing out here is you know, Boeing is great when the market's going up, and it takes the Dow Industrial south in about 2 seconds. Boeing is putting 64 negative points. Goldman's putting 25. You get 3M putting 23. Johnson & Johnson's putting 15. If we go take a look at Boeing, what you're going to see out here is that this baby is not only down, but it's down on volume. Now, this is also going to be a heads up for the February 9th deal. The reason being is this. So, February 5th, you get down on volume. We have a high volume low, $317.39. Has a huge bounce. Okay, we go from 317, you go up to 371. 371, you get 5.4 million. 317, 10.5 million. We come back down again on the 2nd, huge volume again, 10 million. Guess what, folks? You're coming into that. You just broke that with 11 million. So now you got an ABC down. We get the A point, 371. Your B at 335. That's pretty good, okay? So we're talking about 36 bucks. Your C out here is 54. So you're talking, well, you're talking a 320. And a 320 gets you right into the 317. Bottom line, that baby, I suspect, number one, it's going to go after it. The real kicker is, are we going to blow that number away? Because if you blow that number away, then you're going to see Boeing come down pretty dramatically. We go take a look at, let's go look at the king dog, Amazon. We take a look at Amazon out here. Amazon's still hanging at highs. You're up $6.31. You're at $15.94, big number. Apple, we go take a look at Apple. What you have with Apple right now, Apple down $1.62. You're inside the breakout area again, meaning the 18th. January 18th. Bottom line is that that's saying that, you know, we'll see whether they get a, excuse me, folks, expansion of volume. But this is vulnerable, first off, down on March 2nd. And then we do have that high volume low that's laying out there at 150. The high volume lows are crucial to wrap your head around, folks, because that's where we're going, you know. And in fact, let's go look at ExxonMobil. That's been laying there for quite some time. Oh, check it out. It's breaking it. 73.90, yeah, it broke it. So this is a big heads up. And the heads up here goes like this. You got Exxon down 87 cents. You're trading at 73.65. You're breaking the swing low. You're going into the 73.56. That was the last low that was testing the 9th low, and it couldn't even get out of that way. So I expect you're going to build more cars there to basically get that baby taken out in spades also. Volatility, yeah, we have it all over the place. Facebook, let's go take a look at Facebook out here. Facebook right now, that's, okay, so this is an indication this wants lower price too. Why? You're going up on dramatically lighter volume. We're going up on 13 million shares. You're coming down, you're coming into 37 million, and you're going up $2. Pretty intense. It looks like Trump is going to get Larry Kudlow to be the his next economic advisor in the White House, the director of the White House National Economic Council. What's going to get interesting there, folks, is that we'll see how long it takes from Trump meaning to spit him out also, because what you do have is that at the beginning of these sessions, you know, everything is rosy. It doesn't take too long. And in Kudlow's deal, Trump is saying that they basically are thinking along the same lines. You know, Kudlow's interviewed me 3 or 4 times. He's definitely, he has a long enough track record that he absolutely does not think like Trump does. You know, so I suspect, you know, he'll get in. I wish him the best. There's no doubt. And what does happen is that This is going to be the folks that, you know, like open trade versus don't like open trade. So the good news is that him replacing Cohen helps that somewhat. That's the bottom line. So we'll see where that shakes out. There's no doubt, though, it's going to be interesting, because what you are going to see is, because he has such a long record of being out in the public, his views on many things are basically already out there. So we'll see what he has to say against or with those views going forward. Stay right there, folks. We'll come right back. We have the Dow Industrials down 240. NASDAQ is off 12. S&Ps are down 19. We're going to be right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Dow Industrials right now down 267. You get the NASDAQ off 17. S&Ps are down 21. Let's go inside the NDX 100 and see the strength versus the weakness. Strength out here today is PayPal. PayPal is up 3.9%. Expedia is up 2.2%. Netflix is up 1.4%. And ASML Holdings is up 1.4%. Taken away from it, you got Tesla down 4.8%. We have Take-Two Interactive down 4%. Ultra Salon is down 3%. And you got Charter Communications down 2.7%. If we go back to Tesla for a second, what you're going to see out here is that you're down 16.24. You have some volume behind the move. You know, what we have in Tesla is this. You have high volume low, November 2nd, 292. High volume low, February 9th, 294. That baby, I expect both of them are going to get hit. Let's look at this on a weekly. Okay, so weekly, let me get the volumes back up here. Oh, this is really a problem, child. Check this out. Yeah, I got to bring this back more, actually. So we'll put it back 4 years first. Okay, this is going to get interesting. So this is what you have. Look at this. Oh, what a classic this is. Man, this is cool. Okay, so I'm going to have this set up just so you can see how this, you talk about building cars, man. This is going to be a trip. So Tesla, folks, had traded in a consolidation from, let's see, April of 2014 over to March of 2017. So you had a 3-year consolidation. You broke higher out of the consolidation, now been in a consolidation since April of 2017 to the present time. That being said, what you have here is that you have these high volume lows at the bottom of the consolidation. So number one, you're going to go to the bottom of consolidation. The real kicker is going to be, does it basically hold at the bottom of the consolidation, or does that thing basically blow through and get into the lower range? And, you know, we'll find out when we get down there. So that's the technical news on Tesla. The fundamental news on Tesla is that I suspect in the last week, he's lost 2 big executives. Let's see, Tesla has always been an intoxicating place to work as an adrenaline-fueled, mission-driven boot camp. Some top executives have departed only to return to the unique drama that is working for Elon Musk. Many others have quit for good. I'm just reading an article that's running across here. Within the last week, however, Tesla has confirmed 2 of its top financial executives had parted ways with the company. In February, its president of global sales and service left for Lyft. This churn complicates the already challenging test for Musk to prove that he can operate his companies as capacity as he has shown the ability to build them. Bottom line is that the markets, you know, in order to get the acceleration forward that Tesla needs, that any company needs, the bottom line is that you can't be having your top sales guys leaving. That's the bottom line. Because each and every day, and particularly in Tesla's case, they are looking to push sales in a huge way. They're in the sales business. He's in the sales business. And this Model 3 is still having some production problems. So it's basically, as supported the company, the bond structure inside Tesla is pretty intense, meaning that they've sold a lot of debt and people continue not to ask questions. You know, it's a very unique type of company like that. The thing that's pretty amazing, this morning I was on the TD Ameritrade network, and a Harris poll just came out. And inside of that Harris poll, what the Harris poll was about is this, folks. The Harris poll, this particular poll, was actually a retail type of poll. They do this every year. And what it is that they're asking a good sample of the United States, what brands do they feel that, you know, they think are great brands? Well, bottom line is that Tesla was right up there. I mean, right up there, too. You know, that wasn't a shocker, okay? What was a shocker, and that's what the segment was actually about, was Apple and Google lost their place. Apple and Google went down dramatically inside of that poll. Now, inside the poll, check this out. This is pretty cool. The top 3, not the top 3, 3 of the top 10 were actually supermarkets. Another one was Chick-fil-A. You had Amazon was number 1. So the take there kind of goes like this. The take is that it's a retail type of take that someone else likes the brands. I suspect they like the brands because they get in touch by the brands every day. That's how this shakes out. And The reason I'm bringing it up in the Tesla case, that's why he can sell so much debt. That is what has happened. Because fundamentally, what has happened is that people aren't looking at the fundamentals behind it. They're looking at the aspect of, do they like the company or not? Yes, Chick-fil-A is a private company. It's a private company. Wegmans was also in there. Wegmans was number 3. And I've heard of Wegmans, but I've never seen a Wegmans. I'm sure a lot of you, if you haven't been down south, maybe you haven't seen a Chick-fil-A also. But market-wise out here, let's go take a look at what kind of volumes we have. You get 336. We're at 473 inside the NYSE. Inside the NASDAQ composite, you're at 1.6. Okay, so the composite is going to have some volume. We'll see how the NYSE shakes out as we come into the closeout here. If we go take a look at the SPY right now is 76 million. So we've done 13 million in 30 minutes. 86. Okay, so what that's saying, the SPY is going to basically run into about 100 million. So we are going to get an expansion of volume. If we take a look at the 3Qs, because what happens with the SPY, folks, is that you're going to get a big trade at the very end of the day. The Qs out here, we've done 31 million. Bottom line, that's light volume. We're trading 171.58. The Qs would have to get back inside the 170.91 level in order to basically get inside the lower range. The composite, however, NASDAQ composite is in there. 75.05, the composite would have to get up into in order to basically get out of that lower range. The GDX, let's go over to a few of these gold equities. GDX out here trading at a price point of 2169. Sideways movement, not much action out here. You know, bottom line is that we need a bid in here. Let me go look at Barrick, ABX. Okay, so that's a good indication. Barrick's pushing higher. You have some volume behind that move. Newmont, not bad, not great. Rangel Resources, that's a good setup. I like Rangel. So Rangel's rejecting lower price, has lighter volume. Stay right there, folks. Coming right back. We have the Dow Industrials right now down 271. NASDAQ is off 18. S&Ps are down 21. Coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. The Dow right now is down at 292. You get the NASDAQ off 24. S&Ps are down 23. Percentage-wise out here, what we have is that you have the Dow Industrials down 1.1%. NASDAQ is down 0.2%. S&Ps are down 0.6%. Let's go over to the small caps and take a look at the small caps as we come into the last 20 minutes out here. So small caps right now trading 157.50. They never... Bottom line, tested their highs. What they're trying to do right now is get into, it looks to me like this is going to be intriguing watching this. The small caps are also trying to get into where they broke topside from on Friday. The high of that is 157.49 at the open. And we're at 157.51. So I expect, number one, you're going to get slightly lower. Number two, with the way that this is setting up right now, it looks to me that what we're going to actually get is that you'll get the sell coming into the close. We'll see whether we get any type of bounce. Right now, the SPY is at 274.82, and this is pretty intense. And the reason it's intense is this. This has been building cause all day, folks, to close under the 274.84, and it's right where we are right now. And if we bring this back, what you're going to see is that what's given it support is that, Friday. It's pretty intense, actually, because it's like, there's the bar right there. It's 274.15. The way this is set up is that what is wide open, and we'll see whether it's going to be at the close here or you get it at the open, is that can get gapped down very quickly and close that full gap where we had gapped higher yesterday on the open. And that's how it looks like it's going to be setting up here. Let's go to the XAU and the HUI. So XAU out here, sideways move out here, $79.65. Gold Bugs Index, and this is the one you got to really keep your eye on because this has been a problem child. If you're in this market, here's where the problem lies. The HUI, the range, the higher range, really, and this is not scientific, okay? It's, technical analysis is an art more than a science. What you have is that you have December 7th, $174.19. We broke topside at $174.97. We are trading $173.95. This is broke under it a few times. Now, it's broke over it, too. Bottom line is that when you put this together, though, that the HUI are the equities, the gold equities, that you can't hedge forward production more than 1.5 years. We want to see that higher. That's the bottom line. Why? Because if the gold price is going to go higher, you're going to see the HUI go higher. way that the, let's go over to the dollar. So DXM. So what's happening with the dollar right now is trading 89,240. Okay, it's not a bad setup. The dollar has been in this range, meaning it's a lower range. We've been in the same range now since January 15th. You know, the top of that range is approximately 90,140. The bottom of the range is 87,830. What is happening out here is that we are now pressing into the bottom of that range, not the bottom of that range, the bottom of the last swing point, and we do have some volume behind the move. So let's see, it's Wednesday. Yeah. You get 2 more days in the week. You got triple witching coming in Friday. We're going to get some action. You know, this dollar wants to get down into this 88, 820, 87, 830 on a short-term basis. Longer term, what we do have is we have a confirmed ABC structure on the way down. So it seems that the way that that is set up is that the metals should be pushing higher as we come into the market Thursday and Friday. Friday's going to be the big number, man. That's the number. Let's go over and take a look at a few of the other commodities out here and see what they're doing today. So gasoline caught the bid. That's up 1.8%. You had the API numbers come out this morning. What you had is that you had a huge build inside the crude market. And you had a huge draw in gasoline and distilled market. Lean hogs are up 1.1%. You get sugar up 1.1. Cocoa's up 9/10. Natural gas, we get the natural gas numbers coming out tomorrow. That's down 1.8%. You get beans down 1.7%. And crude is, let's pull that crude market up. So the highs and the lows today on crude. So you get down to 60.11. You're at 60.91 right now. This is pushing lower with volume. Yep. Yeah, you get juice on this. So this is saying crude wants to get down to 57.90. Right now you're at the 60.89. Let's go to Chevron. We know that Exxon continues to get to lower price. Chevron also. Chevron's down to $1.57. You're at 114.91. What's intriguing here is that the large integrated oils have been going lower for quite some time. They have been saying that the price of oil is going to go lower. Well, it hasn't yet. Bottom line, though, keep that in mind because what you have now is that you have both Chevron and Exxon. They're in the trading day of the 9th of February. That's a high volume spike. They're in it. In Exxon's case, it wants to break it. Chevron is just coming into it. Well, actually, Exxon is whatever. Let's see. Exxon broke it. Yeah. So Exxon broke it today. The low of February 9th is $73.90. Exxon's at $73.60. So bottom line is that it's not only broke it, and then what Exxon does have, they both have this actually. Exxon has a high volume spike at 66.75. So I expect that's game. And there's actually 2 of them. There's 2 separate high volume spike at lows. They're going to go after those lows. That's how this thing is shaking out. Just go back to the NYSE for a second and see if we got any. We got 508. They'll throw 300. So the NYSE looks like it's also going to have an expansion of volume out here today. And that's what we get. This could turn into a rough week. NASDAQ is at the 1.7. They'll throw 500 million, though, into the NASDAQ in the next 15 minutes. NASDAQ seems to get a huge amount of volume each day into the close. NYSE does, too, but the NYSE can get a couple hundred million where the NASDAQ can get 300 to 400 million pretty easy. We go take a look at, let's just look at GE again because a couple of tigers are saying GE's at those lows. Yeah, it's at the lows, all right. Right at the lows. They're selling away GE. So your swing point on GE is 13.97. Looks like it's going to blow that right away. If we did that, 19 to 14.5. Yeah, if it's going to do another ABC down, the projection is approximately $10.30. So $10.30, you know, the high of 2009 is 11. You get to 10.30, guess what? That means that GE is going to go to $5. Maybe GE just got out of business. I suspect it's going to be pretty soon that they're going to kick GE out of the Dow Industrials. You stay right there, folks. Coming right back with the last 10 minutes of the market. Dow Industrials right now down 258, Nasdaq down 16, S&P's off 19.5. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 246. Nasdaq is off 14. S&Ps are down 19. Yeah, well, let's talk crypto. And what you did, one of the tigers were bringing up, Paul was bringing it up that Google banned all crypto-relating ads. Okay, that is no doubt. That's going to, it's hitting the crypto world out here today. There's no doubt. What you have is that you have Bitcoin breaking the 83.68 mark, and guess what? That puts game on for 79.39, which is the high of the last low. Because guess what, folks? Inside the crypto market, well, let's take a look at it. So you got Litecoin down 5.7%. You got Ethereum down 8.9%. You got Ripple down 9%. Big numbers when you take a look at them. And those big numbers, by the way, are warranted. Why? Because the crypto world is brand new. Now, there's plenty of people that absolutely know that the crypto world is out here. That being said, when you have the largest platform for advertising, banning every crypto deal, that's going to make a difference. Now, what I do expect is also going to happen. I just don't see how Google is actually going to get away with that. You know, bottom line, you know, because there's plenty of crypto. Let's read what they said. There's plenty of crypto companies that are fine, are legit. They're just starting and all of that. Okay, so I suspect a few of those, maybe the Winklevoss twins that will basically take on Google and say, okay, listen, man, you know, the bottom line is that you can't just turn around and say, okay, straight across the whole crypto world, you're not going to let us advertise. That's not how it works, you know. That's particularly not how it works in the good old USA. You stay right there, folks. We'll be coming right back with numbers after the close. We have the Dow Industrials right now down 256. NASDAQ is off 17. S&Ps are down 20. Coming right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. You are only responsible for your half of the relationship. There are two halves in every relationship, but you're only responsible for your half of that relationship. It's not up to you to control the other half, respect the other half, and there's always going to be peace in that relationship. Market-wise, let's take a look at it out here. We had the Dow Industrials close down 248, NASDAQ down 14, S&P's down 19.5, gold contract down $1.20, trading at $13.2580, silver down 6 cents, $16.56 an ounce. Copper, flat, $3.13 a pound. Light sweet crude, we had the EPI numbers come out this morning. We had some big movement inside the oil market. Bottom line ended up being flat, up 17 cents, $60.88 a barrel. Notes and bonds caught the bid, folks. You had the 10-year note up 7 ticks, 30-year bond up 26 at 144.30. Let's go over to the 30-year right now, because what you're going to see out here is that this is the first time in 2.5 months that we actually took out a swing with volume. Well, it's the first time we ever took out a swing in 2.5 months. So bonds have been going down on price, up on yield for that long. And what we did out here today is that you got into the price point of 144.20. Oh, look at that. And we didn't take it out in volume. Okay, we didn't take it out in volume, man. We did 283,000 contracts versus basically 341 as well as 480. So we're over the price point. Bottom line, it's going to need more juice. What I do expect we're going to see is that I expect we're going to see it go up to the February 6th time frame, because that was a sign of strength. 146.21. That's on your 30-year. Let's go to take a look at the 10-year. And what that's saying, by the way, that is saying that we're going to get follow-through. To me, that is saying is that we're going to get follow-through to the downside out here tomorrow. So we take a look at the 10-year. 10-year is coming into your swing. The swing we're talking about in the 10-year is 120.22. Right now we're trading at 120.17. We actually hit the 120.22 today. We've done 1.59 million contracts. That also is going to need more volume, where that's coming into 1.9 million as well as 2.6. What I do expect we're going to see in the 10-year is that the 10-year also is going to go out and test the 122.02 level. If we go to the TLT structure, we take a look at the TLT. The TLT is the 20-year plus bonds. That means that inside the ETF, that means that any bond that's inside the TLT, they'll start off as 30-year bonds. As they start basically coming down on time expiration, that's what's inside the TLT. The TLT took out the swing, didn't have the volume on the swing, but bottom line, took it out. That's saying the TLT is also getting up to 121.82. The TLT closed up $1.05 at 120.24. King dollar. King dollar up 72 ticks, trading 89.265. If we do go over and we take a look at King dollar, what you're going to see inside the King dollar market is that we actually got into lower price with 24,000 contracts. That's a big number, folks. Bottom line is that you are pushing into the lower swing. No, it's not the lower swing, into the last swing that we had on March 7th, and you're pushing in there with some volume. We did 24,600 today. You're pushing into 23,500. That says, number one, more than likely you're going to break it. And then what we do have at these lows is that we have a high volume low at 88.255 that looks like it not only wants to get tested. What we do have here is that you have the you have a ABC structure down that is confirmed, and that's a much larger ABC structure on the way down. And that baby, if we take a look at this, what you're going to see is that this is a major break. We basically put this back, and what you're going to see is that it's been one move down since January of 2017. We broke with wide price spread, accelerated volume in January. Bottom line is that this has a price projection of 82,330. Your lowest swing point in this is 78. You know, what continues to hold the dollar up is the aspect of the highs of 2008 as well as the highs of 2010. You know, we'll see how long that can last if you can get a bounce coming off those levels. Some of the and by the way, we did have volume on the way down today. Inside the NYSE, you did 829 million. Let's see if we got it in the NASDAQ. The NASDAQ was kind of light on volume. Yeah, the NASDAQ is light on volume. We did 2 billion, so that's going to be a big heads up. That's some divergence inside the NASDAQ. What we did do, the composite. What the composite did is that the composite got back inside its lower range. The lower range we're talking about is 75.05. We are at 74.96. Now, what that does, that sets up that you can get back inside the lower range. Now, what you also have is this. Now, this is what's going to be pretty intense. If we open lower tomorrow, what you're going to have is that you're also going to have an island top inside the composite, which is very, very hard to do, by the way, okay? And you're talking about a 4-day island top, so that's pretty intense, particularly because if you broke, oh, see, that's going to be in the NDX 100 also. Now, the NDX 100 is not back inside its lower range, but if we open down 20 points tomorrow inside the NDX, you're also going to have an island top there. You get that, guess what? that is going to be a monster failure. That is going to be saying that the NDX 100 is also going to be running for the lows of February 9th. If we take a look at the cash S&P, what you're going to see out here in the cash S&P is that right now you're at 2748. You know, we had gapped higher when we tried to get into the 27th of February. It failed. Bottom line, let's see what kind of volume we got inside the SPY. The SPY, there you go. Okay, so we had the expansion of volume inside the SPY. SPY down $1.42. We did 102 million. That's after making highs of 91 million. Bottom line, SPY is going to be going after the March 2nd level, which is 264.84. That's 11 points lower than we are. And if we get volume there, guess what? What's going to be wide open and is wide open in the market in general is the February 9th lows. If we go over to ExxonMobil, let's see where Exxon closed, because Exxon blew it away. Bottom line, the low of February 9th, $73.90. Exxon's already got it. $73.60. It's going lower. Has volume behind the move. That tells us quite a bit. Stay right there, folks. We'll come right back. We had the Dow Industrials finish down 248. NASDAQ down 14. S&Ps are off 19. We'll come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish down 248, NASDAQ down 14, S&P's off 18.5. And, you know, we're going to see where this shakes out. Larry Kudlow, looks like he may be the next director of National Economic Council. You know, that being said, what's intriguing here, the way that this came across the it's been out there the last couple of days, but the way that it came across the last couple of days, today in particular, folks, had to do with, well, here's the quote. U.S. President Donald Trump says he's is very strongly considering hiring CNBC commentator Larry Kudlow as the director of National Economic Council, replacing Gary Cohn. Kudlow told the Wall Street Journal that he accepted Trump's job offer and that an announcement would come on Thursday. Now, that being said, folks, we know that Trump doesn't like anyone else getting like a lot of press out here. So it's going to be intriguing to see, number one, if, in fact, that's what's going to come out tomorrow morning. Most times what we've seen so far is that it basically it comes out, and then we go from there. Now, that being said, this is what you have with Larry Kudlow, is you have a basis that he's been out in the media for a long period of time, so we know what his views are. And I suspect it's just going to be a matter of when that he actually spits Kudlow out also. So here are some of his views, okay? And this is, I think, another reason why, you know, we'll see whether this pick gets done tomorrow, because the amount of press out here today is pretty incredible. So here's some of his predictions. And 2010, actually, let me bring this back a little bit further. Yeah. So we'll start with 27 to 29, the financial crisis. In 2005, he said all the bubbleheads looking for a housing price crash in Las Vegas and Naples, Florida, and the wider economy would be proven wrong. By December 2007, the month that the National Bureau of Economic Research later dated as the start of the recession, he was arguing that there was no recession and that the Bush boom continues. The pessimists are a persistent bunch, he said. So that's 2005 to 7. 2010, he predicted in 2010 that Federal Reserve Chair Janet Yellen would spur higher inflation, which didn't happen. In 2014, he argued lower oil prices were good versus the Fed, and most economists view that the winners and losers to lower oil prices in the U.S. had become that we're the losers because we had become the biggest producer. On economic growth, echoing Trump, Kudlow in 2015 said the U.S. should have a 5% growth target, which is more than most economists think is realistic. The Fed's long-term growth estimate is less than 2%. Treasury Secretary Mnuchin sees U.S. economy expanding by 3% or faster because of the tax and regulatory reforms. In 2016, Kudlow predicted a business recession looms. Profits did decline before recovering. On tax cuts, in December, he said Trump's tax overhaul will lead to a 3 to 4% growth, more opportunist than most forecasters, and said that the president is on the side of growth angels. He said in February that a recovering economy could push long-term interest rates above 3.5%. On immigration, in 2015, he called for a halt to immigration, changing his position, he said, because the national security concerns seal the borders, he wrote. On trade, he criticized Trump's trade agenda before the election and more recently labeled his tariffs as tax hikes and prosperity killers. He joined other economists in warning that they put 5 million jobs in industries that use steel at risk. On the dollar, he argued Trump needs to embrace a strong dollar policy. On the Trump market, he predicted that the stock market would go up if Trump was elected, and that was contrary to most commentators. Bottom line, he was absolutely right there. But you can see, when I look at this, right, the aspect between the trade, between the dollar, and the amount of press he's got out here today, we'll see if, in fact, by tomorrow morning, we're going to have Kudlow as the new head of Economic Council, you know, because earlier today, when I saw it, I said, okay, yeah, that's gonna happen. And then, because of the amount of publicity out here, and then it's saying, the one part that where my head's going with this is that the Wall Street Journal No, that he's quoted. That he told the Wall Street Journal that he accepted that Trump's job offer, and the announcement could come Thursday. The history of Trump is that he's the one that better say whether you're on or not the person that is going to be on or not. So we'll see where that shakes out. 877-927-6648. Let's go take a look at the NDX 100. NDX 100 out here. We did 39 million shares, small expansion of volume. We're at 171.68. Inside the NDX 100 out here, the strength versus the weakness. The weakness out here happened to be Tesla. Tesla was down $15.50, 326. You had Take-Two down 3.7%, or $4.26. Alta was down 3%, or $6.41. Let's go over to Alta, because Alta had a nice counter-trend bounce the last few days, gave it up again in spades. You know, 2 weeks ago it was trading $191. Yesterday it was trading $213. Gives it up $201. This thing is heading back for its 187 number. Inside the Dow Industrials, the culprit out here inside the Dow today, putting big down numbers, was Boeing. Boeing was put a negative 57 in it. Goldman put negative 28. If we go take a look at Boeing, what you're going to see is that Boeing traded lower, had volume behind the move. We did 13 million shares. You're going into another high volume low of 10 million. And the way this sets up is this. So Boeing, high volume low, February 5th, February 6th, no, February 9th, no, 6th also. 3 different high volume lows. February 5th, 317. February 6th, 317. And February 9th, 319. All high volume lows. Well, guess what? We did more volume today coming into those high volume bars than any of those 3. What that sets up is that you're going to go after it, number one, and we'll see whether it breaks it. That is technically, fundamentally, what this seems to be about, is that it had to do with its top supplier. A challenging first quarter at Spirit Aerosystems Holding may spell trouble for its biggest customer, Boeing. Boeing shares fell, dragging the Dow down after Spirit Aerosystems chief executive officer said the company is working through hurdles to meet increased production targets for the 737. Boeing's main source of profits. Kansas-based Spirit has deployed so-called SWAT teams to about a dozen struggling suppliers to ease bottlenecks as Boeing seeks to lift the run rate to 57 planes per month by the end of 2019, up from 47 at the beginning of the year. That's, it's such a bummer, man. Can you imagine? So this is just an aspect that they're so busy that they can't get the parts made enough in order to push that out. You can imagine, the I think it's 737, is that what it was? Yeah, the 787 is their cash cow, folks. Oh no, this is for the 737. That's their cash cow. Bottom line is that they're trying to push it up per month, an additional 10 planes. That'd be 120 planes per year. Big numbers, folks. Stay right there. We'll come right back. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now finished down 248. NASDAQ down 14. S&P's off 18.5. And if we do take a look at the NYSE, that came in with 829 million versus 780. So you had the expansion of volume there. Inside the composite, NASDAQ composite, you did 2 billion versus 2.2. So bottom line, composite, that's light volume inside that composite. No two ways about that. IWM, the small caps out here, that did 18 million. You know, bottom line is that that's not a huge expansion of volume. We hit highs yesterday with 17 million. The three Qs, that came in with 40 million. And bottom line is that's shallow volume also. You know, yesterday we got to a high of 55 million. You're coming into 38 million. We did 40. So you got a little small expansion there. But bottom line is that that is a contraction of volume. Let's go to the XLF. Take a look at the financials out here. Financials did come down with volume. We had an expansion of volume, 56 million. They also failed with price and volume. February 27th high. We did that yesterday as well as Monday. So the financials are saying, number one, we're going down to the March 2nd level, which is 27.89. And this does have a high volume low laying out here on the 9th at 26.76. And that correlation right there, no doubt, is all about the spreads inside the bond market. You know, bottom line, what you have there is that they basically, it's not that they're tightening up, it's that the rates once again are going down as the price of notes and bonds are going up. We can take a look at the XLE. XLE is still a little problem child. You know, this is down from a high of $78.39. That was generated January 24th. You know, it was down 40 cents today, no big deal there, but that high volume low, it's going after it, which is 64.47. So it's certainly it's a big number that's out there that I expect is going to get hit. We're definitely going to get a bunch of news out here in the next couple of days. Hey, let's go over to Bitcoin. So we have with Bitcoin out here is that Bitcoin out here today, it goes down $740. It broke its swing low. The swing low we're talking about was the last swing low from last Friday. That's $8,368. Now, what this sets up basically can go right after the low well, first I suspect they're going to be the high of the low, which is a 79.39, but you're right next to that. We're only $400 away from that. This is going to be pretty intense because that low that's out there is $1,900 lower than that. On the 5th of February, 6th of February, we went from 79.39 to 59.22. What's going to be intriguing here, folks, is this. I brought this up, I think, on Monday. There are market participants that are basically looking at how the crypto world is trading as an indicator of our own S&P. You know, bottom line is that, you know, when you're in markets, you're looking for any type of edge you can get. So it's going to be really intriguing to see if, in fact, we do get follow-through on our S&Ps. You're going to end up seeing more people watching where the crypto world is going for the aspect of the S&Ps themselves. Now, I suspect what that has to do with is this. That has to do with euphoria versus fear. Fear and greed. That's what that has to do with. So I suspect what they're looking at is saying, okay, listen, we hit a high in the crypto world December 18th, 19,530. Euphoria was there beyond belief. Okay, the blow-off was pretty amazing, okay, when you look at it. On November 13th, Bitcoin's trading 5,600. A month later, actually, yeah, a month and 5 days, when you take a look at the whole calendar, Bitcoin's at 19,500, right? So it goes up 14,000 in 31 days. Now you're down at those levels again. The real question is, number one, does it break that low? And if it breaks that low, I know when we were looking at this before, so let's do this. This is serious business, man. See, when this, the way this is set up, this can, if this was a normal equity and we had volume, and I could look at the volume behind it, the breakout area here, you get a couple of different breakout areas. The first, one of the big ones was right where it went down to the first time, which is 5,900. That's when we broke topside, and you did that on November 17th. You come down, you break that, well, guess what? The next level down there, man, is that 44.53. You break that, the next level is 1,800, and then the next level is 939. It'll be a total mind blower, but yet we know that can happen, that you could lose 90% of the whole move, and guess what? You still might go higher, because I want to show you something. So watch this. That sounds insane, right? That it goes down 90%. Watch this. This is crazy. I'm going to bring Amazon up, and I think, let's see what it did. I can bring this back. I got to go back. Let's see, what year is it? 28? Yeah, I can go back 20 years. So when I go back 20 years. Let's see how this went. Yeah, so watch this. Amazon in 1999 hit $110. Okay, so that was expensive in 1999. People thought it was crazy, right? $110. Then Amazon went back to, there it is, man, unbelievable. It lost 90%. In 2001, Amazon was $9.56. That was your NASDAQ crash. So that was 90% of the value. It's going to be really wild to see if, in fact, that goes down to those levels. There'll be buyers. You go down to those levels, I think there's enough behind that you'll be buyers. What we did have out here today with the catalyst, it seems that the catalyst for that move down into it, let's pull up, it had to do with, let me pull Google up, because what happened is that Google came across this morning and said that they are banning, here we go. So Google says that it will no longer accept cryptocurrencies ads from entities that, that's all it is, that aren't verified by the company. That's not a big deal. That's interesting, man. So check this out. So Google plans to ban advertising cryptocurrencies and other speculative financial products across its advertising platform starting in June. The company announced. The new policy will also restrict ads for binary options, financial spread betting, and other methods of speculating on crypto trading. Google is following the lead of Facebook, which banned crypto advertisements on January 30th. Advertisers offering different products promoting Bitcoin. Investing will have to be certified by Google before they can advertise through AdWords, and even then, certification will only be available to advertisers from certain countries unnamed in Google's announcement. Bitcoin's prices fell to their lowest levels in a month following today's announcement by Google earlier this month. The Bank of England, Mark Carney, said cryptocurrencies were failing and urged a global crackdown on the $450 million market in order to align them with the broader financial system. So, you know, we talk a lot about Bitcoin. We talk a lot about the Nadex platform, just so you can really get your head wrapped around this. Binary options, financial spread betting. Bottom line, Nadex, folks, is the only regulated platform in the United States that trades options, spreads, binary options. Europe is where they have big problems with folks trading binaries that are not regulated. Stay right there. We'll come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Well, Kudlow, it looks like Kudlow is going to be there, folks. Let's see. So you just had, Sarah Huckabee Sanders said Kudlow was offered and accepted the position. And then just coming across the tape here, and this is where this is going to get really wild, is that you also have, let's see, where are we at? Kudlow just come out and said, bottom line, that Trump, here it is right here, Okay, Larry Kudlow, the incoming White House economic advisor, said he believes that President Trump doesn't want to see the value of the dollar go down. A great country needs a strong currency. He knows that, said Kudlow, after being chosen to replace Gary Cohn as director of White House National Economic Council. I have no reason to believe that President Trump opposes a sound and stable dollar. Bottom line, folks, is that if we take a look at this, what you're going to see, in order to have a sound and stable dollar, you need, bottom line, not a million tax cuts and deficits, and the deficit is right through the wall. If you're looking at Tiger TV, what you're going to see is that the high of the dollar was the first week of 2017, 103. We're at 89. Bottom line, we're at 89. It looks to me like we get a confirmed ABC structure on the way down. So, as I said a little bit earlier, I think it's going to be a matter of time before Kudlow gets spit out as Cohn got spit out. Let's go over and take a look at the sugar market. So, sugar out here for one of our tigers. Sugar is trading $12.76 a pound. And if we bring this back, now this is pretty cool. I haven't traded sugar for a long time, but this is always, I might have to take a look at this, Z, because sugar, I liked trading sugar. Okay, so let's bring this back. We put this on a continuous contract, because what you're going to see is that this baby, you know, is laying out where it went topside in August of 2015. We had hit $10.13. We came with strength off of that. In 2 months, you were at $14.80. You pulled back, and then it had a nice run going up to 23 cents a pound. So you came under, let's see, 12.53. It's pretty cool, man. So this is pretty intense, actually, that in June of last year, you had 12.53. This year, we hit 12.53. Now, let me bring this back to the contract we're trading right now. We're up 1.1% today. This had broken down pretty good the last 2 weeks. Yeah, I like the setup. So, this is what you have. Oh, man, this is nice and volatile. This is pretty amazing, actually. So, the range you're going to look for to get back inside, first off, is $13.53. That's what you need. 13.20. The bigger range is 13.49. We had broken down really big time on February 27th. You came right back on February 28th. You get a little bit higher, broke down again on the 7th of March. Let me see, you did 115,000 contracts. That's good. Okay. So it looks like most of the selling was done. It was done two separate days. You had big time selling, flushing out the bottoms on the 27th. You went back up, flushed them out again on the 7th. And that's something that you like to see when you're, you know, when you're going into lows, folks. What seems to happen in the marketplace, you think you're at a low. It can always get lower. It always seems to get lower. If, in fact, you're going to go dramatically higher, and in this case, what you're seeing is 2 separate times, man, you come down hard with price and volume. Then guess what? It wasn't over. Yesterday, you come down again. Look at the difference, though. The difference yesterday was that the volume contracted in a big way. We did 77,000 contracts versus 115,000 versus the 113. Now, that being said, you didn't have a lot of volume today. 56,000 contracts, not a big number. You get about another 10 cents. You want to get inside. You have 2 separate ranges. You want to get inside the $12.84. You get that, and we get some strength, then you're going to get some action, you know. So as to the aspect, do I think that is, you know, viable on the way up? It's not bad. Bottom line, it's got to prove itself, though. Thus far, what you have, the way that's set up is that it can test that low once again. So big numbers out here. Oil numbers came out today, folks. Bottom line, oil was pushing into lows, has volume as it's pushing into lows. It looks like it wants to go lower. Let's go over to the natural gas market. For what we are going to have out here tomorrow morning is that we're going to get the natural gas numbers. Natural gas was down 1.6% out here today. We did 137,000 contracts, and yeah, natural gas 273. Yeah, natural gas has some support, man. Natural gas looks to me like it still wants higher price. You know, you came off a low of 256. You're at the 274. That looks like it's going to basically try to make its way into this 294. Now, what's really wild about that is that when you look at the aspect that we're coming into the spring, spring is next Tuesday. That being said, all you have to do is go look at Boston right now. Boston is basically cold, snowbound in an amazing way, and you would never know it's spring. Let's go over to the gasoline market. So we get unleaded gas trading at $1.92. The differential out here this morning, when we had the API numbers come out, was this, is that you had a huge build inside the crude oil market. The distilled market, as well as the gasoline market, had a drawdown. And as our man, Mr. Dave White, was talking about in his show, is that what you also have now is you have a changeover from basically winter to summer with all these different blends. Bottom line, you know, we'll see if that can get more juice tomorrow. It looks like the unleaded gas market, unleaded gas wants to run up to $1.94 a gallon, XB1. Let's take a look at this on a longer-term basis because, of course, we're coming into the driving season once again. Couple months, May 30th, that's the official beginning of the driving season. If we take a look at this on a longer-term basis, put this up at about 10, 15 years, what you're going to see is that this is still a counter-trend bounce. You know, the high of 2015 was 218. We had one spike last year up to 217. It gave it up in spades. 3 months ago at 195. Bottom line, it doesn't look to me. What we've done inside the gas market is you're coming into viciousness from 2008. That's when the unleaded gas went from $3.63 a gallon down to 78 cents. As well as 2014, we went from $3.15 down to $1.22. Bottom line, folks, is that oil, gas, we have plenty of it, okay? And we've been pumping it out hand over fist, and we're going to continue pumping it out. So it's a whole different ball game than when you go back 8, 9, 10 years. We have lots of oil. We're pumping it out. You have electric cars that are going out there in a huge way, and it's making a huge difference. And then, of course, on top of that, you get car ride sharing. You get Uber, you get Lyft. That is bringing down the aspect of how much we need supply versus the demand. The Dow Industrials finished down 248, NASDAQ down 14, S&Ps around 18. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And if you want to take a look at what's putting pressure inside the S&P, what you're going to see is this. So you have an index, the Standard & Poor's 500 Aerospace and Defense Index, okay, capitalized weighted index. Bottom line is that you have a lot of the aerospace and defensive stocks inside of this. When we take a look at this, what you're going to see is that this was down 15 bucks today. You're to 12.63. You're already, though, you just broke the swing point from the 2nd of March. That is setting up, folks, that you're going to go after this 12.08 level. And, you know, if we go over to one of the biggest bottom line, space and defense contractors, you're going to see Boeing. Boeing came in with monster volume out here, 13 million today. You're going into a swing point that only has 10. Let me just go look at Lockheed Martin for a second. Lockheed Martin was down $1.78. Oh, interesting, man. So this is already at the lows. Lockheed Martin at the high volume swing low is 326. We hit 327 today. That looks like inside the S&P. That is, you know, bottom line, you got to remember something, that the Dow is price weighted. S&P has the largest stocks in the country, in the world, inside it. Those defense stocks, they've been on fire on the way up for a long period of time. And now what you do have is that you have them, UTX, let's just go United Technologies. You have them going down and going down with some volume. United Technologies, you're at 129. That has a high volume low at 122. It's coming into its March 2nd level right now, March 5th level, rather, at 128. It's going to need a little more volume to break that down, but bottom line is that that's where a lot of the pressure is coming in, and the oil stocks. ExxonMobil, big number on the way down. That's below the February 9th level. Chevron is coming up to it. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you, folks. Go have a blast with it. Yesterday's gone. Tomorrow's not here. What are you doing right now? Thanks for being here, folks. Look forward to speaking right back here, 8 o'clock tomorrow morning. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
No matter what